All right, everybody, welcome back to another video here on the Dividend Doggo Show on YouTube. I'm going to be running you through the weekly portfolio review, and we're diving straight into the Dividend Doggo portfolio with a couple interesting things that happened this week. First off, we'll just go into the very red performance of the portfolio for the week. Several stocks were down pretty red, however, you can see that that's kind of offset. You can see the earned dividends coming in for the week at $2,197, which is absolutely amazing. I am very excited for that to actually get deposited into the portfolio in just a couple weeks' time. So $6,367.84 was market gains, and that was negative. So overall, let's take a quick look. We can see just off the top that AbbVie and Johnson & Johnson were doing fine. I'm starting there with them. AbbVie came back up a little bit. J&J was down a little bit for the week. AbbVie had been dropping really hard, so it's pretty easy to see it's getting close to that buy point again for me with AbbVie. I have not put a lot of money into AbbVie since I originally made a lot of deposits and purchases into that company, and the recent news with the government has basically it's one or the other. Either the CCP is hitting me hard on one side of my portfolio, or the US government's hitting me on one side of my portfolio. It's like one or the other for me right now. It just feels like my stock portfolios are just always under attack right now. So I do feel pretty good about AbbVie, especially when it's down around or below the $100 mark. I think it's a pretty decent quality stock to buy and hold for quite some time with a hefty dividend. I do want to go straight into consumer. Altria was down pretty heavily for the week. I have been buying recently a few more shares of Altria, and it's one of those stocks that's far above my original purchase point. So coming back down a little bit into the 48 range is absolutely fine for me. If you were to entry point it right here, you would still be getting a dividend yield of just shy of 7%. Everyone says this is a dying company all the time. Looking at their information, you can see that yes, the stock price came down a little bit, but the earned dividends coming in, that's going to be an absolutely phenomenal payment. This is going to be absolutely amazing to receive this. The majority of this will be a qualified dividend as well, which is fantastic. If you're looking at this and you're really hesitant about it, it kind of is what it is, but if you're really liking the stock, you should like the fact that it's down a little bit this week and you get a better entry point. Home Depot was up this week, which is phenomenal. We did have the dividend just pushed through for Home Depot, so there will be a buy of Home Depot coming up this next week. So spoiler alert, Home Depot did pay out its dividend. You'll see that when I go and look at the actual dividend information, and it's absolutely phenomenal. I'm super excited to hold both Lowe's and Home Depot. You can see they're both up pretty strong this week. I do need to pick up the slack here on Lowe's and get some more money flowing into that. So that's definitely one that is on my radar for the future here. Coca-Cola is down just slightly, PepsiCo down slightly, Costco down just a little bit. TAP is up, and their dividend just paid out. Very happy that they reinstated their dividend, and it is paying again, which is fantastic. I'm hoping The Rock can bring me some of that magic money. It's absolutely pretty solid for consumer pie, even though we're down a little bit with Altria. So, on to utilities. Everybody knows the utility sector got wrecked last week. It was not just VST that was hurting me. Duke was down, NEE was down, both more than VST. I think if you're looking at utilities and you're not looking at these three, these are fantastic entry points, especially for VST. You can see that my cost basis is down at about 1842, and it's 1779 right now, meaning that if you were to buy it today, you're getting a 3.25% dividend yield with a very high likelihood that they're going to do a dividend raise around, I think it's February, March, somewhere in that range. They usually do a pretty hefty dividend raise. So we're going to see what happens with that. I'm just going to hold them. They've been going up and down like crazy for the past 6 months. Just going to continue holding on. You can see that they did cross over that ex-dividend date. So the dividends received is going to be $909.59 for VST. When that comes in, if they are below my cost average, I will likely roll that back into them. Even though this position is already relatively high, I'm pretty confident they're going to do another dividend raise for all the shareholders. And I think that that's just going to be a phenomenal position rolling into 2022 and 2023. We are going into, after utilities, we're going to take a look at the Common Money Pie. So SCHD was down just a little bit this week, and Berkshire Hathaway was down just a little bit. These like sub 1% fluctuations, that's just regular market fluctuation. I mean, if you pull out and you look at 1 month, they're down pretty significantly. A lot of my portfolio, if you look at 1 month, is down pretty significantly. Then you go out to 1 quarter and you're back in the green. So try not to get too focused on every week being in the red, because some weeks are going to be red. Try to focus on getting a broader picture and a future outlook, especially if you're a newer investor and you just got money in one of these stocks where it's going red and keeps going red. Usually things do recover in the long term, and you have to get a bird's eye view of the portfolio in a quarterly to yearly perspective to keep your mindset going and be proactive about it. Industrials, we did have 3M payout. You'll see in just a moment, that was one of my stock purchases for the week. 3M is down a little bit this week. Lockheed Martin's down a little bit. Cat's down a little bit. Raytheon was up, the only one up in my industrials pie. So this is one of those situations where some dividends rolled in. I looked at it and I was like, yep, I'm absolutely going to roll some money back into it. Real estate, surprisingly, it was barely green. Vici is down. Realty Income is down, but ABR is definitely carrying this slice, this pie here, and Store Capital both staying in the green, kept that portfolio. That portfolio pie was in the green overall for the week. Energy, or this is mainly oil, EPD, which is pipeline, oil transmission, natural gas. They were definitely in the red just a little bit. VLO coming back up 3.4% this week. Chevron back up a little bit, S&P up a little bit, and PSX. I've been debating on cutting PSX and rolling it into Chevron for quite a while. So with the energy pie, not too much is changing here, but I am in the future going to be looking at potentially rolling in PSX into Chevron, possibly into VLO. I'm not 100% sure. I do think that they've been in the red for quite a while, Chevron and PSX. You can see here that S&P and VLO have both outperformed them significantly over the past all-time view for this portfolio. There was not a lot of money put in. If you look, when I first started this portfolio, about $900 was put into this pie total. Overall, it stayed pretty much like that. There was not a whole lot of money in that pie until about June 8th of 2020. I started slamming some money in, and then bought in really heavily into EPD around September of 2020. So overall, I haven't been fully invested in the energy sector for all that long, but I'm just not sure about how many of these companies I really want to hold and have to research in the future. I might trim down that just a little bit. In tech, basically, when we go into 1 week, we can see that Apple was down significantly after a kind of poor display of new content and products. It just overall wasn't that appealing for most consumers. I've shifted away from Apple significantly at the beginning of this year. One thing I will say is that I'm excited about Microsoft raising their dividend and continuing forward. They are looking at the rumor mill said that they are looking at an acquisition of another major game studio. A lot of you know that I'm very heavily into gaming. It's why I own Tencent. It's why in the past I've owned Activision Blizzard. I've owned other stocks that just are, I think my wife actually still holds some Activision Blizzard, but overall it's one of the sectors of entertainment that I find very amusing, and I just enjoy a lot of video games. I held Nintendo for quite some time. Microsoft is looking like it's going to come out like the giant in that sector. It's just going to be beast-like. They own some of the best studios in Exile. I believe they own Obsidian outright. They own so many of the old school great RPG makers, and they've got Bethesda now, which means they own Elder Scrolls. There's some seriously awesome content on the horizon for everyone over the next few years. And they're a titan. They're just acquiring more and more game studios, and I'm excited to see where that goes. So don't be surprised if you see some more Microsoft buys in the near future. Even though this portfolio is kind of dividend heavy, Microsoft is raising their dividend, and they're consistently just doing an amazing job. I'm loving it. Monthly stocks down overall. PIMCO down quite a bit actually this week. PIMCO is one that I've had for quite a while. This is the Dynamic Income Fund, and if I go in and look at this, my average share price is $31.26. It is currently sitting at $26.56. This is a monthly paying stock with a very high expense ratio. Once this gets closer to even, I will likely cut this out of the portfolio entirely. It's a very small slice overall of the total portfolio. I haven't added money to this in quite some time. Basically, this pays out about $40 every single month. It is paying just about a 9.5% yield. Obviously, my yield on cost is a little bit lower. I think it's about 9% for this particular stock. However, the expense ratio on this one is one that'll bite you in the butt. So overall, BST was down just slightly, and Stag was up just a little bit. I do kind of regret not putting more into Stag over time. I might add to that a little bit here in the near future. But as you can see, 1 week view, the earned dividends is going to look absolutely fantastic coming into the portfolio for the beginning of October. It's going to be absolutely phenomenal, and I'm very excited to get that to come through. So the one other thing that I wanted to kind of briefly touch on here is what I made in purchases. 3M, this was a pure dividend buy. These are both dividend buys. I did reinvest dividends from several stocks to do this 3M purchase. And then Altria was the other stock purchase of $52. These were both fully funded by dividends. And I did go in and set up some interesting accounts. M1 started a program to launch basically custodial accounts. As you might know from being around the channel, I do not have children, but I do have loved ones that I care enough that I want to set them up with a future portfolio. So in order to do that, I did my first ever withdrawals from the portfolio. I withdrew $200 total, split that into 2 accounts, and I will show you, I briefly showed, this is what that account looks like. I named it Dividend Growth and Financial Independence. And the plan is that they will get a homework assignment every month, and they will get $100 deposited into SCHD. Of course, with the market going red near the end of this week, from the time I bought, it's just gone down slightly. However, it does mean that these buys, that will make them eligible for the dividend that's going to be paying out the end of this month. So I set up 2 of these accounts, and I'm really curious to see how this goes, because educating people on personal finance is really the goal of this channel. And it's going to be fun to get to watch this portfolio, both of these portfolios, begin to grow from just contributing $100 every month, assuming homework is completed. So this is pretty wild for me. This is a landstone mark. This is the first time I've ever withdrew money, and I do plan on funding that primarily with money out of the dividend portfolio from Dividend Doggo's portfolio here. And I'm going to try to use dividends to fund their portfolios. They are barely teenagers, so this will have about 4 to 5 years before they will even be able to access the accounts. But I'm hoping over the course of that time frame, it gives them a pretty significant interest in the stock market and interest in the holdings that they have in SCHD. And we'll see how that growth looks for them over the course of 4 to 5 years. I think that if someone had shown me that I could make dividend income passively so simply from just buying one single ETF and calling it a day and getting raises on that consistently, that I would have been very, very interested in seeing that, and it would have gotten me even more interested in stocks. Having that little information gap to bridge the education system here in America, I think is pretty key for all young individuals. Understanding the stock market, understanding the way that ETFs work, the way that constant contributions build up, the way that dividend income starts to snowball and roll into the portfolio and buy you more and more stock. I think showing them that over the course of 3 to 4 years, and then having them either get into college, go to the workforce, whatever they choose to do, they will at least have the knowledge of how to invest and how to be consistent about buying, and what the benefits and the perks are of being consistent with that. So I would love to hear feedback. If anyone thinks that that's an absolutely wonderful idea, let me know in the comments section. As you know, we've passed over 1,000 subscribers, which has been amazing. We're almost to 1,100. I can't even believe that that's happening in the course of like a week and a half. My nose is bugging me really bad this morning. There's definitely allergies going around. So I will be letting all of you go. Thank you very much for liking, commenting, subscribing on the video. And remember, if you want to see the portfolios, you can click the links down below in the description box. There's also, I believe, still a promotion going on where you can get money for depositing and starting your M1 finance portfolio. I think it's still $50 right now. So usually it's, not nearly that much, but if you start with $100, and you will get a $50 bonus, and I will receive a $50 bonus if you use the links in the description. Thank you very much for watching, and let me know how your portfolio looked. How red were you? What percentage were you down? And what did you buy this week? Thank you very much for watching. Dividend Doggo signing out.